In today's video, we're going to review a recent swing trade made in Qihoo, 360 technology, ticker QIHU. And this was a buy setup, a long entry. And let's get to the setup. First of all, we want to note the beautiful basing action in Qihoo. As the market was selling off in October and November, Qihoo basically held above the 200-day MA and climbed back above the 50-day moving average in mid-November, while the S&P was setting lower highs and lower lows. So this is one of the few stocks in the market that was showing relative strength to the S&P 500. So we really took notice of Qihoo on 11/20 as it broke out above the pivot, but fortunately for us, the breakout did not follow through and stalled out just above the prior swing high. And why I say fortunate for us is because our market timing model on 11/20 was still on a sell signal, which had been in place since October, I believe since October 12th. When our timing model is on a sell signal, we generally do not buy stocks, especially after a significant correction in the market. So, as I mentioned, Qihoo fortunately did not take off that day and pulled back over the next few days and formed a bullish reversal candle on 11/26. Fortunately for us, on this day, our timing model had already shifted to a buy signal, which it did on the close of 11/23. The very next day, Qihoo gapped lower and formed an inside day, and then you have the strong move up on the following day. This was our signal to enter the position on a breakout above the 11/26 high. Now, since our newsletter is an end-of-day service, we established a buy entry the following day on the open at 23.90, and the price action, as you can see, followed through nicely to the upside. It exploded higher on heavier than average volume and cleared the prior swing high of 11/20 convincingly. The very next day, Qihoo tried to push higher but stalled out. Still, we held on to the position. There was no reason to sell at this point. And the very next day rewarded for holding as Qihoo exploded another 10% higher. Now, with our entry point at 23.90, we were up about 13 to 14% on the close of 12/3. Now, generally, we look for stocks to run about 20 to 30% higher when market conditions are good over a 1 to 4 week period. Since market conditions were not ideal at the time of this trade, we don't mind going ahead and taking a quick, 10 to 15% gain. So what we did was raised our stop to the 26.70 level to protect a 10 to 11% gain in Qihoo, while still being able to participate on the upside if Qihoo were to gap up higher the very next day and run another 10 to 15%. Who knows? So again, we raised the stop to 26.70, protect ourselves on the downside. So the next day, Qihoo unfortunately gapped up and sold off sharply in the morning session and took out our stop. However, with our tight stop, we were able to log an 11% gain, which is pretty good when market conditions are not ideal. And as we see here, Qihoo continued to sell off and is back down to the 25.30 level, which is just above the prior breakout. If you would like to learn more about our style of swing trading, where we look to identify stocks making explosive moves of 20 to 30% higher over a 1 to 4 week period, please visit our website at morpheustrading.com and sign up for a risk-free trial of our swing trading newsletter, the Wagner Daily, which is delivered to you Sunday through Thursday night. Thank you for joining us, and good luck trading.